So how did I make $350 trading Tesla put options? So looking at Tesla on 11:15, looking at Tesla on the 30-minute time chart, 11:15. Let's see. So not this candle, but this candle right here. So basically what I did was I played Tesla put options as soon as it approached the 20-day moving average, and basically waited for a rejection from the 20-day moving average. After that occurred, within that same candle at 11:29, I sold out the position, making a gain of $350 trading Tesla put options. So what was the goal here? So I played put options on Tesla. The reason I played put options on Tesla was because 1, 2, 3 candles got rejected by the 9-day moving average, and basically, or 20-day moving average. Basically, my goal was to, okay, well, if that pattern is occurring, if that pattern has occurred 3 times already, it's most likely I can continue that pattern throughout the day. And so basically I was like, okay, let me play some Tesla put options as soon as it approaches the 9 or 20-day moving average, and wait for a rejection from either moving average, and basically waited for a rejection to occur. After the rejection occurred, that's how I made $350 trading Tesla put options. The way you can go about finding finding opportunities in the market is by using this free website called finviz.com. Basically what you do is you go here where it says screener, click on market cap, click on mega. I try to trade mega cap stocks most of the time, and if you're especially a beginner, I suggest just sticking to mega cap stocks, and then click where it says perf YTD. And basically from here it's just going to show you a list of stocks from worst to best. So generally I like to analyze these stocks from 1 to 20. So I'll try to analyze if that particular stock is at a good support level on the daily chart, or I'll try to see if that particular stock is is about to reach a resistance level on the daily chart of that particular stock. And what I'll do is I'll try to also analyze the 30-minute time charts of these stocks from 1 through 20, and I'll try to see if I can use the moving averages throughout that day and see if I can get into a opportunity. So let's look at an example, CRM. So looking at CRM, let's see. Okay, on the 30-minute time chart. So basically on the 30-minute time chart, so you could see that once CRM regained itself on that 20-day moving average, you could have gotten into a small call position of CRM once it regained itself on that 20-day moving average. And basically what you could have done is next went to, you want to know when to sell. Basically as soon as you got in, as CRM regained that 20-day moving average, you would sell out the position as soon as it approaches that 9-day moving average, or you could sell out the position once it reaches this pre-market level of 260.98, and you could have sold out there too. So you could have had 2 opportunities to sell out the position once CRM regained itself using the 20-day moving average, and you could have sold as soon as it approached the 9-day moving average, or when it approached pre-market levels of 260.93 or 260.74. Either level works. So and basically you could have played also call options when it landed on the 9-day moving average here or here. and you could have played call options here and here too. And basically, here's an example, right? Let's say you missed out on these two opportunities right here, the 13 and 1330 candle, right? You're like, oh man, I missed out on these, I missed out on those two opportunities. Basically, what you could have done is like ride the momentum of the bullish trend, and basically you could have played call options here or here, right? And let's say specifically you bought call options here on this candle, right? You bought call options on CRM as soon as it landed on the 9-day moving average, and you're basically, okay, I got into the position, what's next? So basically, as soon as you see that your position is about to approach the 180-day moving average, that would be your selling point. So that would be your spot to sell out. Yeah, to sell out your position as soon as it approaches that 180-day moving average. And basically, what you're trying to do is you're trying to reduce your risk of losing your gains. So what I mean by that is you're trying to secure the bag and not risk losing money. Then you're basically not risking losing your gains, the bag. You're not risking losing the bag. So basically, you're trying to use the moving average as your entry point when, for example, this 1530 candle, you bought CRM call options as soon as it landed on the 9-day moving average. And basically, your exit point would be as soon as it approaches the 180-day moving average. So that's one way to know of when to sell out your position. Another way to know when to sell out your position is by analyzing your percentage target. What I mean by that is my position, for when I sold out the position was up 6.60%, right? So my threshold for the most of the times when I'm trying to trade, I'll try to aim for a 5 or 10% threshold or percentage target, and basically as soon as it reaches either of those thresholds, I'll sell out the position and move on to the next trade. So that's another way you can know when to sell. So you got to mentalize your percentage target and try to be realistic with it. And so that's pretty much it. If you guys want to use that free website, it's called finviz.com. And if you guys want to sign up with my Webull link located in the description below, feel free. You could get a possible cash bonus from Webull if you sign up with my Webull link. That's pretty much it. This is not financial advice. As always, take care and bye.